in such a call to get some installer experience. So, De Villiers, the floor is yours.
Great, thanks a lot. Yeah, I'll give a short introduction. De Villiers Botha, I'm one of the co-founders of Solar Reef. We started in 2010. And you know, many of you will know that that was a bit before the curve, before the tariffs increased and before there were a large-scale manufacturing of these systems. At that time, still most of the technology were European, and it was reasonably expensive compared to today, and we had cheap electricity on the grid. And what we find now, which is specifically relevant for today's discussion on financing of these systems, was that there wasn't real grid parity in most instances. But recently, yes, from the volume manufacturing, the prices went down, the grid got more expensive, and apart from load shedding being one way of looking at a need for these, the fact is that your normal grid-tied systems, more often than not, are financially viable to do. Yes, so over the years, as Antje mentioned, I've been involved with SAPVIA actively as a member since 2013. I've been vice chairs of various subcommittees there, but important for you guys perhaps, I was the chairperson of the steering committee for the PV GreenCard program when we built that program. Being a lawyer by trade, also I was the author of the terms and conditions at the time, but don't shoot me for that yet. And then, yeah, so we really wanted this quality seal in the industry because we knew we were waiting on the SAN standards to come out. We wanted guys like you to come on board and get a quality seal that you could subscribe to for your benefit to gain respect in the industries. What we've seen, the uptake of that, it's delightful. We know many municipalities require PV GreenCarded installers to register these systems. We know that many of the banks also require that, and they use it actually refer their clients in instances, and Carl might indicate the way they approach these on a better scale, but they often refer clients to the SAPVIA or the PV GreenCard website in that sense to go and look at who are the accredited installers in certain areas. So I'm glad to know that those things are used. Yes, one aspect perhaps that we couldn't do is because SAPVIA and the PV GreenCard and the qualifications are voluntary association, we don't have what we could call policing measures or an ombudsman role, unfortunately, because it is a voluntary association. So that's something that we might in future want to look at on how we could improve that. And we are working in SAPVIA on that. And yes, as Antje mentioned, the last 18 months, I was the chairperson of the small-scale embedded generation subcommittee, or work group rather, within SAPVIA. And we now, out of that cycle, we're going into a new cycle with SAPVIA. And that's a short intro. Perhaps your Solar Reef side, I'm the COO, Chief Operating Officer. We've installed just over 100 megawatt peak of systems, moreover in the commercial industrial space, but also in the residential areas. And oh, we always focused on the rooftop system. So we always shied away from IPP projects. Those we left for the larger international players. And we've call it, in a sense, built and shaped the rooftop market, as we called it in the early years, to get us on board as well. And I'll use one example, and then I'm going to be off, is in solar, well, in 2012, we had a show called, or a conference, 3-day conference called Solar South Africa. And in that 3-day conference, I was the only guy that spoke about rooftop systems, and I had a 15-minute slot. And you all know now, if you go to a conference now, the majority is being spoken about the small-scale embedded generation market. So it's delightful that the market has shifted to us, call it, as the SSEG market. One perspective, perhaps Antje might just tell me there, is that the German model went the reverse. Germany started on the rooftops and went on to utility scale. South Africa, we started with the IPPs and now diverted to SSEG. Just some perspective. But what we did, we used the learnings from Germany and from the other European countries, but especially from at the time with the PV GreenCard program, the BSW and the GIZ's involvement to build and assist our industry in getting proper regulation, especially on the technical side out there. But that will be me for now. Yeah, I'll speak again more when the questions come.
Yeah, I think that's definitely a benefit. So an advantage being a bit late to learn from the failures of the others. Okay, so I already noted down some questions, but let's continue with the pitch, and we will go to Dr. Philippe Olivier now. Actually, he is the one we know the longest in the room here. Yeah, is a very old friend of us. He drove all the way down from Bloemfontein when we had our launch in Cape Town in, no, I did not make a note, in 2012. In 2012, quite a while ago. And since then, kind of, we continued to work together. So he was one of our trainers. He even operated a training academy for us in Bloemfontein. And then he stopped because of all the business in his company for 2 years, actually. And now he's back as a trainer for our PV financing course, which we will start in June. Philip, the floor is yours.
Thank you, Antje. Yes, so our business, Olivia Energy, started in 2009. One thing I'd like to find out from De Villiers, maybe at some stage, if they started 1 year after us, how come they are so much bigger than us now? But that's a discussion for another day. So in the beginning, those first few years, we did mostly grid tie systems as an EPC company. In 2015, I did a PhD degree at the Free State University on the financial viability of solar power for dairy farms. And that research was also on grid tie systems. So it's only over the last couple of years or so, as the price of lithium batteries became more affordable, that we started to see actually quite a big swing towards demand for more off-grid systems. And that's why I'd like to share some ideas with you today on what is the best case scenario for financing an off-grid system, or if you look at it from a cash flow perspective. So in other words, comparing your electricity bill to a potential monthly installment if you finance an off-grid system. What is the ideal off-grid application? So I think there are 3 important criteria to look at. Firstly, if you're inside a municipal area, obviously tariffs are higher and it's easier to get to a scenario where your installment and electricity bill is comparable. Secondly, if you have low nighttime consumption, you'll need less batteries, your capital outlay will be less, and your installment will be less. And then thirdly, if the installation is for a business application as opposed to a residential one, then you can claim the VAT back and you have the Article 12B tax deduction benefit. So those are all criteria that makes it kind of an ideal situation. It's not to say that you cannot finance other systems. I mean, most of our off-grid systems that we supply actually goes to rural areas, to farmers, and they are outside of municipal areas mostly. But this is just the ideal scenario. So if I can do a quick example here, I'm gonna share my screen. Hope you guys can see it. If you can see it, right? We can actually look at any one system, and this is just to have a quick example of a physical system. Let's take the smallest one, a 5 kVA system of, for instance, 126,000 Rand plus VAT. If you want to finance that, let me just grab my calculator here. And you've got the tax deduction. Let's say, for instance, this client is doing business in a company which currently has a 28% tax rate. From next year, it's 27%. So let's take the 27%. If you deduct the 27% from the 126,000, you get to 92,000 Rand that you want to finance. Now, if we go to just a normal loan calculator here, insert 92,000 there for your loan amount, and you can borrow it probably, I don't know what Carl says, but probably at 8% now. And let's say your bank manager is not in a very good mood and you get only 5 years to as your maximum period to finance it, you see that you get to a scheduled payment of 1,865 Rand per month. Now, if we just go back to the system there, that's a normal 5 kVA system. You'll probably get about 15 to 20 kilowatt hours or units from it on a normal day, meaning about 500 to 600 units per month. Now, from the next tariff increase effect, I think for municipalities, it's like 17% from July. You'll probably pay close to your 1,800 Rand, which is your installment for the units if you buy them from the municipality. So that is an ideal case scenario, but just to make the point is that the off-grid market is growing, and for the right applications, it is viable to finance off-grid.
Thanks. I'm still following your calculation. Yeah, thanks. Very interesting. And it is especially interesting hearing this from you, as you told me 2 years ago that the off-grid market is dying. But I think we will go into that during the discussion in more detail. Okay, so that were the voices from the installers. And now we have 2 more panelists from the financing sector. We have Kyle from the FNB. He's also not an alumni. But we actually hope to build up a strategic partnership with FNB, or especially your department on alternative energy solutions. So that's what we always try to do, to work together with partners and to offer our alumni access to interesting products or solutions. We actually got in contact with you, or Gideon brought us in contact with you, the director of Resolution Circle of our partner in Johannesburg. We had our first call in March, so very recently, and we saw that there's a lot of opportunities of think what we can do together. And we thought it's a nice start to have you here in the alumni meeting. So, and it would be interesting to hear a little bit more about you and your products, and the floor is yours.
Yeah, thanks, Anya. So from kind of an F&B perspective, we're really excited to kind of be part of industry. You know, I think that the space has really just grown, and I can't believe how fast it's grown in really the last 3 years that I've directly been involved in kind of setting up this business. You know, we're actually developing products now for in this space, and I often refer back to, you know, the early days of this journey, you know, kind of understanding and unpacking, you know, things. So really for us, it's, you know, a little bit of maybe a sales pitch and just kind of, you know, maybe an understanding for some of the attendees is to say, you know, our customers as really both residential and, you know, commercial customers are challenged by 3 things really. And the first is pure energy costs. As Dr. Olivier mentioned, you know, a 17% municipal increase is not sustainable for any business or any consumer. The second one is really energy certainty, and it's no longer just load shedding. I mean, how often do we go into Teams calls and that from a banking perspective or a customer perspective, and one of the participants will send a WhatsApp to say, no, they've got load shedding, but no load shedding's been announced. So things like power interruption from aging infrastructure, you know, areas that like the West Rand of Gauteng, that's traditionally power constrained, where in order to develop, you know, commercial properties, alternative energy solutions with storages now almost a prerequisite. So there's case studies around that. And then thirdly, I think, overall is really the impact that we can have as First Rand and FNB as just being a division of that on climate. Our customers, in certain segments are becoming more and more conscious of the climate. And for us, it's very exciting to be part of this journey in helping our customers in perhaps more ways than just, funding solar plants. But we really see it as kind of an end-to-end solution across those three areas. So when we talk about kind of an end-to-end solution, funding is just really one of the elements. Being involved in procuring a solar plant for our customers is almost key. It might not be directly involved from an advisory point of view where we're calling the shots, but being able to educate our customers is for us very important, and also to offer a little bit of protection against call it the elements that are perhaps not particularly qualified on solar. So working with someone like Green Solar Academy, Sapvia, is for us fundamental, and it forms part of kind of our supplier vetting process, which we can potentially dive into at a later stage, without getting this too bogged down into technical details of how we operate. But we really do believe in supplier vetting and what that means, to the performance of solar plants. And then, that ties very, very well with, the supplier vetting element, is to say, how do we actually place reliance on these solar plants, from a cash flow perspective? What separates a normal loan to make it, call it solar plant funding or green funding. And that for us at FNB is definitely being able to place reliance. When someone like a SolarF says that a solar plant is going to deliver 1 megawatt hour per year, being able to incorporate that into a customer's cash flow and into the valuation of their building is core to kind of the success of the project. And we've enabled many projects like that. So for us, that's also fundamental. And then I think, third, and perhaps to some of the other attendees, that are involved in the residential space is for me personally to be involved in a lot of the process development to get those leads to the right place within FNB, so that we can assist those customers that need funding. I think that's a shortfall which we're currently working on, and again we can kind of discuss what some of the reasons for that, and what we're doing in that space.
Okay, thanks. Good. Now we come to our last panelist. I already said that you have to say your name, Joni, because I'm not so good in pronouncing it. Joni is also an alumni from the first days. He actually participated in one of our first trainings in Pretoria when we still offered the courses at the German school there. Now we are finally back in Pretoria, but it was a long way. And he's also not only an alumni of Green, but also from Resolution Circle. And again, Gideon was the one bringing us in contact. And he told us about Joni's company and the idea to come up with interesting financing options for installers together with an Japanese EPC. And we thought it would be a good idea to give Joni the opportunity to present the product here, and also for you as installers to see if this could be an interesting option for you to use that private financing approach. Joni.
Thank you very much, Anke, and the rest of the team for the invitation. My name is Lehlonolo, or Hloni Ramongalo, and I'm commercial leader at a company called Victory Smart Facilities. And our main purpose is to provide condition monitoring services to farmers, farmer associations, agribusinesses, and fresh produce markets in order to help them maximize their land yield output, leveraging leading edge satellite and hardware technologies, so that they can, and doing that, so encouraging sustainable primary production and market access practices in farming specifically. So we met our current partner who enabled us to participate in this market a few years ago at Wits University, when we were presenting to the Japanese, like the Japanese version of the DTI, truly. And we started engaging with these EPCs, and my background is in electrical engineering. We started engaging with them, and the conversation that got them interested in partnering with us was that, one, our continent has very high levels of solar irradiation levels. And secondly, there is a solid skills base locally, a workforce that is certified, qualified, and can deliver projects that are insurable. And that got them very interested in the local market and how they could possibly expand into Africa. And in that way, we were privileged to, bring some form of foreign direct investment, just as a little startup, trying to innovate in agriculture and land use. So for the installers in the audience today, we have an offering where we are looking for the next 2 years. Our pipeline, or rather our projection, our trajectory is to deploy in the regions of 5 to 8 megawatts of decentralized power through power purchase agreements. And for installers who have that kind of project where a customer is willing to buy the power, and you as an installer have the capability to do the work and install the system for your customer, but the lack of financing, as it were, given the current situation in our economy, if that is a constraint to you, then please, we are willing to have such discussions for systems from 50 kilowatts to all the way to 1 megawatt, but that's a little bit too much. But yeah, anything in that range, we are absolutely willing to discuss and really enable green power across the continent, because that is a fundamental shift that needs to happen. And then, yeah, it just needs to happen, period.
Good, thank you. We actually wanted to have a short poll at the beginning, and because the people still were checking in, so we waited a little bit for that. And Vivian will launch the poll now, because we want to know a little bit more about your background of the participants, to see how many systems you installed in the last 2 years. So is it coming? Yeah, it's coming. Okay, so we are getting the results. Yeah, so what I would like to investigate a little bit more, and I think that's also the thing what is super interesting for the alumni is, so what is really available? So what financing tools are available? What financing tools did you use, Philip and De Villiers? What financing tools do you offer, and how would it work? And yeah, maybe you can start. So are you only installing the systems for the customers, or does SolarF also operate own systems? Do you have experience in getting financing for your own systems or for clients, or yeah, what can you tell us?
Especially on the commercial side, commercial and industrial, the clients since around 2013, 2014 that went for the larger projects, and I think I'll just perhaps refer to a few of them, was the Clearwater Mall project, which was a 500 kilowatt peak system that we built in 2014, which was at that time the first sizable rooftop of that size, and then expanding with another megawatt 6 months after that on the same site, which was one of the first where it triggered the the principle of when is own use still own use, because that's before we had the current 1 megawatt schedule that's hopefully soon enlarged. At that time, those clients are in the property business had access to cheap funding from themselves. So what we call them direct capital investment. So like those clients would purchase the project from you as you would go and buy a bread and milk, effectively, to put it blandly almost. So they would straight make a payment arrangement, paying according to certain project milestones, and make your payment. What we've then seen is a real growth into that is then getting the bank finances along. And at that time, the banks were very slow with respect to Carl. Perhaps he can speak on their journey, on how they've grown into the market. At those times, banks saw PV systems still, as I would put it, as a BMW 7 Series. It's a very expensive thing you can buy, and it's just got 4 wheels, and it can take you to wherever a Toyota Corolla could also take you. So the banks applied very much at the time a straight installment sale agreement principle, limited to 5 years, and where, as I mentioned earlier, the grid parity didn't exist yet. So in other words, the saving, because of the expensive grid now, but at that time, the grid cost or the saving from the grid did not compare well to the repayment. So you had to fork out other money to make up for the shortfall. What happened in the meantime is that the banks has gotten on board with looking at the specific solar asset as not necessarily a BMW 7 Series, which doesn't bring an income. They see the savings and they compare the saving to that repayment and the other costs. Important to take into account perhaps is also your own M costs and all those type of things over the period of the system, or the finance period at least, to make sure that the client is not going to be worse off with the system than he would have been otherwise. And that's where it's delightful that the banks are now on board with that. So that market is now picking up. I'd say from our experience, and as I said, in 2014, 2015, everything would have been DCI. We see about 30 to 40% of projects now being bank financed. And then the other market is the PPA market that Shawnee has also mentioned. So that's where you get into the client don't own it and you sell them power at a tariff. We are also moving into that space now, but that's I know some of our colleagues in the industry has done it before and focused very strongly on that, while we've been focused more on the EPC side. But we do have the need of clients that says they don't want to own the asset even on a financed basis, but they want to have the benefit of a cheaper tariff, and where you then offer them a PPA, where essentially we would then own and finance the asset and then sell them the power over time. I think perhaps while I'm on PPAs, just use the opportunity to use a recent case that we had where we found a client got a quote on a PPA where the client was a very seasonable consumer of power, and the colleague of ours in the industry proposed to them that not on a take or pay basis, as some of these PPA agreements do have, but proposed on them on the used electricity only tariff. But this client, being a wine cellar, was very, very seasonal. And if we then take those consumption data, where in the winter months, they consume about 15 kilowatt active during daytime, where in summer they would consume 500 kilowatt active, being as badly seasonal, the PPA would not have made sense for this client. So taking purely an annual consumption or a bill could be risky in a PPA instance. So I think the importance and the guidance that I'd like to give there is that it's important to take your load profiles of that client into account and to make sure that the system design, and that is, I think, over all three of those call it sales that you would do, to make sure that your consumption profile matches the system. But on a PPA, especially, well, on both instances, both on a take or pay basis or on the use only basis, you need to be sure that the client would be able to consume all the energy that that contract would deliver. But yes, the shift has been initially DCI, now to the bank finance, and in the short future, there is a growth in the PPA space too.
Let's put the PPAs a little bit on hold and stay with the financing. What always is my question is if the banks see the PV system itself as an asset. And actually, this question goes directly to Kyle, and but then also to Philip, because so we also have some experience with PPA, and I personally would never finance an system, an off-grid system. And I wanted to get this question, or give this question to Philip, and also to Kyle, actually, if you distinguish between off-grid and grid-tied systems. But so actually 2 questions about the assets. And I think what is also interesting from our participants, we have most of them built less than, we have 2 categories. So 30% less than 10, and 20% 11 to 50, 8% more than 50, and 30% no systems. And this is our way to understand this time how many not installers are in the room. So we are again a quite big group of installers and a lot of people from all other industries or newcomers. Okay, Kyle, the question is, what program do you have to offer? And if I see the amount of systems our participants install, and if I know our alumni, it's especially financing for smaller systems is interesting.
All right, yeah, so great. I think it's important that we maybe just start kind of in a little bit of financing 101, just so you understand kind of from a bank view how we look at assets and kind of some of the challenges that we might have with solar, and you know, that comes, maybe talks to kind of the journey, you know, that de Villiers was talking about, and that is, you know, to successfully lend to any person. I mean, be it a residential customer, be it a business, you know, we look for 2 things really, and that is cash flow. So cash flow is obviously important. Being able to service the debt is you know, just another name for that. And the second element is really, you know, kind of, let's call it collateral. You know, collateral is what de-risks a transaction significantly for a bank. So if we cover you know, if we talk about kind of how banks look currently at solar systems, you know, from a cash flow perspective, we're really starting to understand, you know, how these assets generate, you know, their cash flow, you know, and we can start quantifying those energy savings. And we've successfully done that on really numerous projects for commercial and industrial customers. Where we still have a lot of work to do, and I'll be completely frank, is really on the collateral side of things. So some of the challenges that we've got, and let's use another asset in the energy category. Let's call it, let's say, you know, generators, for example. You know, if in the event of default, you know, there's already a market for used generators in South Africa, particularly, you know, ones of commercial scale, etc. So if something were to kind of go wrong in the lending, that generator could easily be collected and then sold on auction for the bank to recover what we call the loss given default, so the LGD. So when we look at a solar system at this stage, there's no real formal second-hand market, so that adds to a little bit of the kind of challenge that we've got. It's not an asset that's easily removed, so we've had to come up with some, you know, more innovative ways that to kind of look at funding these solutions. So at FNB, we've almost got a, call it a 2-prong approach in commercial and industrial, and I'll chat about residential shortly. So commercial and industrial, we use property as kind of our primary approach. So if we've got property, you know, in the form of a bond, or it's a retail property that's being funded by FNB, those are generally very, very, you know, quite easy for us to look at lending, because, you know, you actually have the property which this asset attaches to. And how we differentiate, as I alluded to in my kind of intro, you know, stopping it from just being a normal property loan is being able to actually incorporate, you know, what value benefit you're getting from that solar plant. So, if it's a 5 million rand solar plant, being able to add that value or a similar value to the property, which is quite important. If that's not possible, so many of our customers might not have their property financed with us, for example, we actually do fall back onto an installment sale agreement structure, and that for us is a great one for particularly the smaller systems that fall into commercial and industrial. Those are easier, generally to finance, and we don't actually differentiate between off-grid and grid-tied. For us, off-grid systems actually, fall under the same kind of fundamentals overall. In residential, the approach is actually very, very similar. And we always recommend to our installers that we have relationships with in industry, advise a customer to look at the existing home finance facilities, because that is often a lot more affordable from an interest rate perspective and also from a repayment perspective. You can fund for in excess of 10 years quite comfortably on a home finance structure. And the other option is really something like a personal loan. There's a lot of work being done in really the residential space, and I think a lot of the banks are going to be announcing some exciting products. I know for certain we will, and we'll keep you guys updated on that.
Okay, we have one direct question from the audience on that.
Yeah, it's a comment and a question that Freedom One buys back their batteries at quite a good price. Does that make any difference, Kyle? So
we haven't incorporated Freedom One's buyback. We haven't had that much knowledge of it or had to actually use it at this stage. But that would definitely make a big difference. When you've got guaranteed buybacks on components and that would make a huge difference for us, and that reduces the risk of the lending overall.
I wanted to ask, when we chatted in March, so I asked you if it would be possible in principle, or if you would consider the PV system an asset, and you said it could be possible, but then the interest rates would be different.
Yes.
So maybe you could.
So that's what I alluded to on the two different structures. So on the one side, we're using the property really as the asset, and the solar PV is part of that property. So we're actually adding value to the property by including the solar. So we're seeing the solar asset as part of the property. So that's the one approach, and we can park that on the one side. Then there's the case where the solar plant is the asset, and there we've taken a view and we've said, okay, in a worst case scenario, if we needed to go fetch the solar plant, in the event of default, which we hope never happens, what would we actually potentially get back from the solar system? And that is, on that, call it an asset finance structure, installment sales agreement. And because it is slightly more risky, there's a price differential that comes in interest, and that is, let's call it 1 or 2% higher than kind of the property approach. So when you rely only on the solar plant as a standalone kind of financing structure, it is a little bit more risky for a bank, unfortunately, and therefore, the interest rate is that little bit higher.
Okay. And if the installers would be interested in a loan from FNB for their customers, so should they contact you, or should they contact their FNB branches, the customers, or how would be the best way?
So we'll share the link. We've actually got an email address that installers can contact us and refer their customers, and that it's alternativeenergy@fnb.co.za. I'll post it in the chat shortly.
Okay, great. Philip, so what are your experience in financing
so Olivia operates a couple of small rooftop PV plants that we have PPA agreements in place with those clients, but mostly we don't do that. So our clients would firstly go to their own commercial bank, and then we also have a couple of options for them where we put them in touch with private financiers, and these guys would look at it slightly different than the commercial banks in that they don't necessarily require collateral. So they are sometimes a little bit more flexible and a little bit less red tape, because they only focus on finance. They don't do other banking services. And then they would basically take a view on the business. And if they're happy that the loan can be repaid, then they would give the money for that. But obviously then they are like, let's say about 2% more expensive than the banks.
Okay.
I have a direct question on that from Willem. He's asking, so if I, for instance, have an existing bond on a property, but at almost 90% of the current property value, will the added value of the PV system be considered for added value of the property in order to expand the bond?
I think that one is for Carl.
Yes.
You can answer it in writing later if you want.
But I think it's quite an interesting one.
Yes. So I'll use some examples. I mean, we funded a 3 megawatt, a set of properties over six different properties to the value of around about 26 to 30 million rand, and they added the value benefit that we could add to the customer was in excess of about 40 million rand on those properties. So in those cases, the recognition of the value, to Willem, to answer your question, is significant and often can actually make or break a transaction. It's often the difference between lending 60% or 80% or 100%. So we're very, very passionate about what the value benefit can bring.
Thanks. Okay. So you, De Villiers, you said a little bit so that you were actively involved in the PV GreenCard process, and I know that FNB has that vetting process for the installers, and that PV GreenCard certified installers have better or the best opportunities to get finance. Maybe you can explore that a bit more, but maybe first, De Villiers, if you could decide how this, what PV GreenCard installers, what role they should play in the game? So what would you say? So what is, your ideal process?
Yeah, I think the principle is that the banks normally look at the off-taker, which is the final client.
Yeah.
But the banks and call it the insurance companies, municipalities look at the quality, and that's the quality of the system then coming through the respect that the installer brings to the party. And that's where the PV GreenCard adds that value to the installer, where the banks then know that this guy has had the requisite training, he's had the assessment, and they could, or he or she rather, let's put it be correct, and they could then, that company can then deliver the proper quality service that they expect to ensure that the system is around for the lifetime of the finance period. As we've mentioned, I think Carl mentioned that it's not as easy as removing a generator. Solar panels are a lot of them, and they don't have much of a residual value. Although we've seen there are a lot of, and that's something perhaps to put out there. What we've seen lately is that solar panels do have a theft risk more and more. It's almost become the new gold. The insurance companies have told us they're increasing the premiums because of that. They've had a few instances of sites where modules were stolen from sites, where modules were stolen from roofs. And hopefully those don't go out into the market and harm people, but that does happen. So yes, the second-hand market value is still not there, but the fact is that there's a long asset that is sold. The banks want to have the security that the system will deliver what it does, and the PV GreenCard guys will stick to the quality. And I think that's the importance for everyone out there, the installers, that to retain that standard going forward, that you've learned, keep on doing it. Yes, it might be that you lose a deal from time to time to someone who's, call it, short selling it, using inferior components, but stick around. In long term, your clients will come and respect you and come back to you for that.
We have one question related to the theft
to the theft. So should we maybe first go to Kyle to continue with the PV GreenCard thing, and then we keep the theft on hold to have it afterwards? And it's not only PV GreenCard, I think it's also PQRF, and it will be hopefully also green alumni.
Yeah. So I'll give context as to kind of why we look at it. You know, and both Olivia Energy Solutions and SolarF are actually vetted with FNB. So you know, it comes down to, you know, again back to that point of really talking about, you know, what makes the difference between, you know, just a normal term loan or actually, you know, really doing solar plant funding. And it comes down to actually really placing reliance on a solar plant, you know, for cash flow and again that valuation benefit. So and then the second element is you know, talking about customer protection. So for us, you know, that supplier vetting element, you know, we've got kind of two panels that we operate that's loosely aligned to the SANS 10142 draft codes that are out, and it's you know, loosely on a below and above 100 kilowatt peak. We've done it in rand value because teaching a bunch of bankers about kilowatt peak can get a bit dangerous. So we've gone to really rand value. So we split it, you know, above and below 1.5 million. So below 1.5 million, we call it the installer panel, and there is specifically where we're starting to look for qualifications such as, you know, the Solar Green Academy, Sapphire PV GreenCard, and various others, including, you know, PQRS and AREP, the P4 kind of certificate. And above, you know, above that, above 1.5 million, our due diligence check is a little bit more intensive, but you know, we still give, you know, benefit for the P4 performance certificate, and also the Sapphire PV GreenCard and any other qualifications. So those are fundamentally important, and we see it as really investment in this industry. You know, so it's not just about arriving and suddenly being a solar expert. It's about, you know, going through the motions and paying your school fees, so to say.
Thanks. Do you want to raise the theft question?
It's not directly on theft, it's on risk in general, but I think that is a big part of it. What is different between grid-tied and off-grid systems? Do you consider the one or the other as a bigger risk?
Is that for me or?
For all, I would guess.
I think for all, yeah, kind of.
So maybe Philip, I could give it first to Philip and then whoever wants to add, because as we now know, he's working in both worlds.
Yes, let me say that we are also working in the solar water pump area. And I think that is the biggest risk, because those are all very remote. And we get a lot of clients who is complaining about the panels for their pumps, because it's out in rural areas and they get stolen. And I've got the most creative ways that farmers use to secure these panels, from beehives under the panels to alarm systems and physical barriers to insurance. Yes, so I definitely think there is a difference in risk from that side to other off-grid systems, maybe at a farmhouse or somewhere, to grid-tied systems, and in areas where it's well lit and there's security and that sort of thing. There's definitely a difference in the risk profile of the different systems. I'm not sure if the insurance companies actually make that distinction yet.
I don't know either. I don't know. Do you have experience, De Villiers, or no?
No, not on the pumping side where they've encountered the insurance problems.
I think it can be any off-grid system which is remote. I was told from one of our alumni that he installed a system in a game farm in the fenced area with all that wild animals, and the solar panels were stolen overnight. So
what we've noted is that the instances, and that's both in a weather risk. So we've seen modules being damaged by hail, We've seen modules being blown from roofs. We've seen roofs lifted where the modules actually held the roof together, as an example. Weather side, as well as in the theft side, the insurance companies do come on board. In general, we had the systems that were prejudiced by these instances. Well, call it what we could for balance of system that was left on site. We could have it at least up within half a week. But the insurance companies came to the parties, did their assessments, and we haven't had a problem where any claim was refused. So within about 3 months, the full system was up and running again. But then again, those weather risks, we know modules are certified, as we all know. So it would have been quite serious instances of wind and hail that you wouldn't normally get there.
Kyle, thanks. Kyle, do you want to add something? Can you speak?
Yeah, so just on kind of a risk, I mean, I think a finance risk between grid tied and off grid is perhaps really for us very much the same. I think off grid is probably regulatory speaking slightly less risky, just considering in a commercial environment. But yeah, I don't see the use case and the cash flow and the asset you're funding in the end, particularly kind of where the technology is at this stage with lithium ion batteries and kind of the cycle warranties we're starting to see. You know, for us as FNB, I can't really pick up a finance risk difference between the two, you know, overall.
Okay. I think that's the right moment to go to the PPAs, because it would be interesting for the audience to understand how you select the installers, how you, Joni, select the clients. So what evaluation process do you have? Will you work only with a certain amount of material? Will you provide the material? I mean, how will you secure that the systems you will finance will operate for 20 years? Or what is the horizon you are looking for?
Yeah, sure. So we are looking to test a few options, because as we have communicated, we don't have any experience in the space. It's just learning from kind of our bigger brothers and the people who have led in the space. And our contract with our Japanese funder is quite flexible in that we are looking to source panels locally or wherever they can come from in the world that are of a good quality and standard based on the country's regulation. That's if we're looking at South Africa, because that's not the only market we are looking at exploring. And that speaks to the whole, I would say, system, from inverters and the other components, and financing that as an asset, like you would any asset. And the biggest risk for us that we see, that Carl touched on, is the client's ability to actually continue surviving throughout the lifespan of the warranty of the product. That for us is a great concern, and there's no way of looking at a silver ball and seeing, hey, this customer is going to still be around for the next 20, 25 years. And that's inherent with business in the context of financing things. So a lot of what Kyle has alluded to as best practice will probably follow the same suit. But be a little bit more. Ours was to enable installers, because I think they have the ear of the customer, and then for us is to really assess the customer's risk, as it were, as because we just need to recuperate our investment that we make.
Sorry. So you said from your other business that you have pretty good contacts to farmers. So yeah. Do you want to start it? Because I mean, if you work with them, if you develop software for them, so then your client, and you maybe it's still not like a solid evaluation. However, you can estimate a bit better if he will survive the next 20 years.
Oh yeah, no, absolutely.
Yeah.
So if you look at the more, I would say commercial farmer segment, I would lean toward, the kind of farmers who produce high quality crops and not even farmers, but I would say farming processes like your nut producers and your fresh produce markets, because I would say that their load profiles are quite constant, to an extent. And those would be the kind of customers that would be more appealing to us. A farmer, you would have to go into a bit more detail into the operations and the ability to actually, if it's viable for them to actually own the asset, and if they can buy the green power at a continuous rate. That is always a sticky point, as Philip had alluded.
Okay, we have a direct question from the audience.
The question is, can the farmers get in contact with your company if they need assistance with the solar financing?
Absolutely. We look at a few things, obviously. What kind of what is it that they want to do? Do they want to sell electricity back into the grid? Is their farm in a position that is not far from a connection point? So we'll look at various I would say geospatial information, to make some of those assessments. And then, yeah, absolutely, we are looking at talking to farmers who are trying to participate in the space. Absolutely.
But you also said that you are looking for a concrete pilot project to set up all the processes with your partner company from Chinese and from Japan, sorry. So what if one of our alumni in the meeting today would have an interesting project? So what would he have to do? How would he?
You'd have to just drop me an email. I'll drop my contacts in the chat and my number, really. I'm highly available, so just contact me.
Okay, and the idea would be to implement the pilot this year, or to start now.
As soon as possible. We are looking to test as soon as possible, and learn, because that's the phase that we are at this stage.
Okay. I would like to come back to 2 points from Philip, actually. One, and I'm not 100% sure everybody, actually most of the guys should know it from the Super Solar School, but maybe you could explore the Article 12B a little bit more, because you said it several times, the importance for financing of solar systems or investing in solar systems.
Yeah, sure. So Article 12B, as amended of the Income Tax Act, basically says that there are certain conditions, of which the most important ones, I think, is the solar system that you install must be for your own use, and it must be, I think, less than a megawatt. The Villiers can correct me if I'm wrong here. But it basically states that you can deduct the full capital outlay as an expense in year one. So, for instance, if you're a farmer and you buy a tractor, normally you can deduct that in a 50-30-20 ratio. So in year one, you can deduct 50% of the cost of the tractor from your income. And in other business applications, I think it's 20% over 5 years. But in this case, it's important to know that for this to be applicable, actually, in your cash flow analysis, you have to have a profit-making business, or else you'll just accumulate your loss, which is also worth something. But let's say let's say you do business in a company, and the new tax rate is going to be 27%, and you buy a system for R1 million, then 270,000 Rand could be deducted. So that's money that you would have paid to SARS in tax, but now you can deduct that as an expense. So that's basically the benefit of it. I don't know if that makes sense.
For me, yes, but do you want to add something, De Villiers?
No, so the model is that you could write it off over 1 year, but now some companies say, well, they don't have the profit in that year to benefit from that. And then they say, well, they still opt to do it over 5 years that you would, or 10 years even, as you could justify that the finance period is there. But the benefit is there should the client have a good problem of a tax problem, let's put it that way. They could have that benefit of writing off that asset off sooner. And it's just interesting to think that and I don't want to touch on regulatory things, but I'm going to make a quick comment on that, the tax regime is actually written to stimulate investment in projects, where we know that the regulatory regime, in a sense, with the 1 megawatt limit that came, and hopefully now would be relaxed, but previously it was sort of a bit restraining the regulatory scheme. But hopefully all of that will now open up on all sides.
I was not aware that you even can write it off in up to 5 years. So this is also possible. You do not have to do that 100% in the first year. So even you could.
You could always extend your time, but certain asset classes you cannot make shorter. So I'm going to use it, and this is from my very old experience. In my previous life, I was an accountant as well. So don't quote me. IFRS is the new standard. Perhaps Carl will know better. But as an example, as I knew it, a motor vehicle, I think you can't write off quicker than 5 years. Where now a TV system, that's why the allowance is that you could write it off faster. So you could always extend it and say, listen, yes, I see my motor vehicle or my PV asset as a 10-year asset, and write it off over a longer period. Remember, because that increases your tax liability then, which the SARS wouldn't care about. They don't want you to reduce it unduly. Yeah.
Which is actually a great selling point when selling a PV system, so that you can reduce your SARS tax payment. We have two.
Sorry, as Philip mentioned, perhaps, and that's just adding to that. What I've seen is that people then apply that as call it almost a 20% deposit to the system, which assists in making that, call it the bottom line, the matching of the expenses easier.
Yeah, definitely. We have two direct questions on the tax point from Vivian.
I think one was already answered, tax benefits for business owners. That is obviously the tax deduction. And second question is, are there also any tax benefits for residential customers?
Not on the depreciation side. The depreciation is a business principle. So no, there's currently, Philip, what I know of, there's no incentive even, or subsidy, or tax benefit for residential, unfortunately. Even they even pay.
Yeah, the last thing I knew of was the Eskom rebates and the solar geysers 10 years ago, but that was the last one.
Yeah, which was not so super successful. Is there one more question?
What we do see is that residential tariffs are normally more expensive.
Yeah.
Which then makes even if you then apply the full cost, which includes VAT and depreciation, against that, that's where you then have to compare the match.
Yeah.
Just incoming, another question.
No.
Can you have multiple 12B tax benefits from one company, but doing equipment leasing models to multiple clients?
So that would mean, do you understand the question? I think I understood it. So that would mean if I am like a company offering PV leasing, and if all the investments I do would qualify to 12B. So that's what I understand, Chris. The question came from Chris.
Yes, as I understand it, that would not apply because you need to install the system for your own energy use. That's how I understand it, yes.
Yes,
Okay.
and in addition to that, perhaps a note, we've often, and that's the questions we get from clients, and you guys would have also had it, as you're in the field dealing with them. They would tell you on the 15th of February that they need this invoice before the end of February for this tax year. And unfortunately, the Act is written to say in the year in which the system is energized. It's just something you guys should just be cautioned of. None of us want to be caught out on, unfortunately, not complying with these things. But as Philip also said, it's to the guy who consumes that. Yeah.
So more of those topics will be presented in our PV financing course. So that was the promotion block.
I get something there, and perhaps just on a PPA basis, looking at the model, it doesn't make sense when you sell a PPA as an, call it, if I understand that correctly, to say you've got an external company owning the asset, selling the power to the third, or to your related party, or whoever you're selling the power to then say you write it off in the first year, because you're not going to have the profits in year one.
Yeah.
The profits are going to, and the PPA is usually coming much later in any event. So it's better for you then to extend your depreciation over the longer period.
Makes sense. Yes, definitely.
I have a very specialized question for Choni, which
could we keep it on hold? Because I just wanted to come back to my second follow-up question to Philip. You said, I don't know if I made a mistake or if I understood something wrong, but with your example for the off-grid system, so you said it would be like a monthly rate of 1,800 Rand, and the system could produce 400 to 600 kilowatt hours. So this would bring us to 3 Rand per kilowatt hour.
Yeah, basically, I think the current rate in municipalities is like, is it like 2 Rand 40? Is it right for prepaid? Plus your 17% increase from July is like 2 Rand 80. So I mean that's just a more or less comparison. I mean there are quite a few variables in there, but yes, you are basically correct.
But most of your systems are installed in rural areas, and I would guess, or I know that the electricity is a bit cheaper there.
Exactly, and that's why I said that is like your most ideal case for an off-grid system where your installment could be similar to your electricity bill. Because in most other off-grid cases, you actually don't come close to that yet. And even though you don't, we supply most off-grid systems to farmers, for instance, and that's where some other factors come into play, like not just the cost of the energy, but also the consistency of the energy, as well as there is a emotional factor also amongst farmers where they are just what is the good English word for gatful? And they just want to get away from Eskom, and they are willing to take a longer view on it, because remember our calculation was based on 5 years. So once you're willing to take a bit of a longer view on it, everything starts to make sense again.
That brings me to the point. I mean, if we see 3 Rand per kilowatt hour with an off-grid system, where you only look at the 5 years. So that means, so we have a little bit more than grid parity. If we think about grid connected system, maybe finance, I mean, they do not work only for 5 years, they work for 20 years. And I mean, how intelligent it is to have off-grid system where we have a more or less stable grid connection. I think that could be another topic for a panel. So, but I want to be a panelist and not a moderator. But so we are now coming to the last 15 minutes. And so most of my questions are answered. So we could have a look what the audience has
we
for
have
us.
a few ones that should be answered quite quickly. We have, when selling electricity with the PPA, at what rate do you sell the electricity? And how does this differ between grid-tied systems and hybrid solar storage systems?
Is that for me?
If you have the answer, then yes.
I think I have a small part of the answer. So for us, we're coming in at 10 to 15% less than ESCOM rates, with solar tariff of about 5% year on year. That's the model we're going to be testing. The second part of the question, I have no answer to that.
If I can say, if you do a PPA, in my view, there's basically three. Look, the short answer, it's a negotiation between you and the buyer of the electricity. And there are basically three advantages that you can offer to your buyer. And first is the cost of electricity, which can then be a bit less. And the second one is the consistency of the power that you supply to them. And then thirdly, if it's like a lease to own type of agreement, then the system becomes theirs at some stage, which is also a huge benefit for them, even though it's over a long time.
That's an interesting point. So, Joni, how is this planned in your approaches? So is this also part of your approaches to hand over the system after a certain time to the client?
Again, as Dr. Philip alluded, that would be the outcome of a negotiation between us and the client, and how much risk they are willing to, play. Yeah.
Okay. Anything to add on that question from De Villiers? Your micro is muted.
There we go. In general, yes, the client would generally want the tariff to be starting at a lower tariff and then incrementing at lower at the expected ESCOM. So this year is a 15% glitch. Let's hope it's a glitch only. That's the principle. There has to be a benefit to the client to opt for that. Just apart from that, you should remember also that in terms of, if you look at Schedule 2, and that's something that would likely remain in the forthcoming schedules as it's amended, is the principle of reselling, where the ethic of it all is to say that you cannot sell power at a rate more expensive than what the client would have paid for the size of connection they would have had had they been connected to the distributor. But if you're going to the hybrid or off-grid market, then the question will come, and it's new territory. I don't have the answer, but I would say that surely you could then look into the reason for being off-grid or selling at a more expensive tariff, because there is no connection. So you had to build the distribution lines to the farm, as an example, or to the site, or as we've experienced, as I think Carl mentioned earlier, in the West Rand, there's some areas where City Power could not supply more power. They're constrained. So the clients have to opt for hybrid systems, adding the storage to that. If you do that under a PPA and you link it to your investment and then base it there on and apply the tariff, surely then, in fairness, you could be at a higher tariff than what you would have been connected to the grid, because simply there is no grid for that additional capacity.
Thanks.
Okay. Another one for Philip. If I have a grid-tied system, which means not all of the energy produced is 100% self-consumed, but also exported to the grid, will this still be considered for the 12B tax benefit?
That's a good one. I mean, all questions are good, but this is,
Yeah, I think yes. I think yes, because I mean, you have a capital outlay based on certain projections, and if you it's like buying a tractor and then making a loss on your crop. You can still claim the value of the tractor. So my opinion is yes.
And I don't know, Div, what you think. I would think that the main purpose will be the relevant factor. And if the main purpose is to produce electricity for yourself, I mean, this is how it is in Europe. So, but.
Yes, I'm actually busy looking up, I'm drawing up 12B quickly, searching for that at the moment, just to make exactly sure on that principle. But the principle is that you need to own it. It's not when you PPA that.
Yeah.
Yeah. So I can jump in maybe just from kind of a tax view. So often tax is covered by case law. So we haven't had this one tested in case law, but you know I believe self-consumption is probably more than 50% for own use. So unless you're exporting massive amounts of electricity and it would only affect, so Section 12B would still apply. Self-consumption is specifically looked at from the 100% rule, so the first year write-off. If self-consumption isn't ticked, it would fall back to 50-30-20, which is the accelerated 3-year write-off, which is what's used under PPA vehicles. So when PPA vehicles are set up, they would generally fall under the accelerated wear and tear license of 50-30-20.
Thanks.
We have another one that I find quite interesting. With regards to microgrid applications, for instance, if we were to install that in an estate or small holding, what financing model would best apply for that? PPA, bank financing. And second part of the question, would we finance the microgrid as a whole or the individual entities?
Maybe to the two financing service providers.
I'll have a stab at this. So, yeah, no, it's quite difficult answering such a question from without past experience. But I would, from a microgrid perspective, and I'm just envisioning like a group of farmers who would maybe a farmer association or a body like that, who would find a way in which they could propose and say, as a collective, we can purchase so much power over an X amount of time, and consistently get power from you for a period that makes the deals make sense. That is something we definitely explore from a microgrid design perspective. But that would be, in my view, kind of an innovation, because I haven't seen or heard of such a scheme.
Kyle?
Yeah, so look, I mean, funding estates and kind of gated communities as a whole is perhaps quite challenging, for a couple of reasons. In that you're dealing with multiple stakeholders that are invested kind of in the microgrid, overall, so you need to look at some of the more international kind of case studies in terms of funding, and that surrounds the name has now eluded me, but basically the concept that it looks to kind of use is really replacing rates and taxes, using rates and taxes and the fact that rates and taxes rate above or rank above most forms of debt to fund the solar plant or the infrastructure. So obviously being able to use something like that overall is a good benefit. I'd rather actually look at funding the project as a whole. I think it is easier than kind of an individualized structure, particularly just considering the scale that some of these microgrids are operating at. I'm thinking of midstream estate here in kind of the Centurion area that that would be practically impossible to finance individually. So you would need to come up with quite a bespoke structure with some strong understanding of kind of the homeowners association, the body corporate, or similar structures before you could actually commit to funding.
Yeah, thanks. I hope this answers the questions. Yeah.
We have millions more here. One to Choni. What return of investments do investors expect from a commercial project on a PPA agreement over a 10, 15, 20-year period?
So what is your company expecting, to translate the question? I don't know if you want to share it. I can't see Johnny anymore.
I don't know if that's a fair question. You know, I'm not sure if that's a fair question.
Maybe
yeah.
Who was it?
It was Sean.
Okay, then Sean could contact.
Yeah, Sean, we could go have a beer and have a chat on it about that offline.
Okay, I think we can have one more question if you would identify one, and so to be prepared, the panelists, to close our alumni meeting today. It would be nice if you could answer, like, in 1 or 2 sentences, what you foresee for the financing sector in PV for the, I wanted to say for this year, but we are already in May. So let's say for the next 12 months. So do we have one more question?
And I think we don't have a nice and short one, but I would say I'll take these questions and then see what I can get out of our panelists after this meeting, and then yeah, send like a follow-up to you all.
Okay, and now before we answer the last question, or our panelists answer the last question, do you want to have your promotion block?
Yes, now comes the commercial break. Since we can't answer all these questions and we saw that tax is really an interesting topic, we have a new course which is called Financing for PV Systems. Simple as that, where Philip will join us to answer all your questions, talk you through the 12B, share his Excel spreadsheets, and give you some tips and tricks how to understand financing and also how to make it understandable for your own clients, so that you can make that part of the package you're selling and marketing to your clients. And the first course is scheduled for the 24th of June and the second one for 26th of August. It's a one-day course. I do not have the price with me right now, but there's a 20% discount exclusively for the launch. So until next Friday, you can register through our website, solar-training.org, and you'll automatically get 20% discount on the course.
Can we finance the course?
Can you, Kyle?
Okay, so maybe we start in the order as we had your pitches. What do you see? What is coming up in the PV financing market in the next 12 months? De Villiers.
I'll jump in there. Yeah, I'm going to reference this to the regulatory relaxations that we expect in the market. So the number that was quoted in SONA was a number of 5,000 megawatt or 5 gigawatt by 2025. Now, if we think on embedded generation as industry, we estimate at the moment we're sitting around 1.2 gigawatt. It means the market is going to grow very fast. So all of us are going to be kept, hopefully, very busy. And as a joint, and that's why you would have heard me, I'm not speaking of my competition. I speak of my colleagues. We are all colleagues. We should work together to make this industry great. I think the move is going to be very much that the clients, and call it as a result of the last year's lockdowns, has run out of money. So the banks are the ones with the money. I think there's going to be a very big shift to the financing options. And it just makes sense. Why use your own money that you can use as capital in your business to do what your core is, whilst the banks now has lucrative finance options available whereby you could do a match of the expense, and you don't worry about whether you have cash flow at the end of the month. So I think there's going to be a big uptake for financing, and PPAs is then the next level when clients perhaps want to de-risk themselves or don't want it on their balance sheets.
Thanks. Philip.
Yes, I think as grid electricity will continue to become more expensive, and as our grid, I think, is not going to be able to solve the issues, and as solar, wind, and batteries are, in my view, going to continue to decline in price, I see the gradual shift that's already started towards off-grid applications. I see that continuing. And I see also more PPAs in future. And then I also see a combination of the two. In other words, PPAs for off-grid systems, which we don't really see at the moment yet. So, Shloni, I think you are in the right space. Good luck.
Thanks.
Thank you.
Kyle, the bank.
Yeah, perfect. So I think for us in the kind of next 12 months, it's really, I think, almost a split between really what Dr. Philip Olivier was talking about and what De Villiers has been chatting about is really an acceleration, particularly, really in our agri communities of off-grid systems. We've started picking up that trend already, 6 months to a year ago with quite a large number of volumes coming through for kind of off-grid systems where and I think you put it quite elegantly, the communities are a bit hurtful. And then, I think the relaxation of really regulations and a little bit of regulatory certainty that we're finally getting is going to kind of push larger, commercial and industrial customers to start looking at solar and grid-tied solutions overall. So we're excited for kind of the growth that we're going to see in this space. And then I think the third one is really the advent of industrial size storage solutions. I think containerized storage is starting to start making a bit of waves, where we funded quite large couple of storage solutions. So I think that's the next kind of wave that we're going to start seeing, and we're excited for what that means.
Thanks.
Yeah, I don't think I have much to say, after, the esteemed guests have kind of taken everything. But essentially, I think that that Eskom is a fantastic enabler to the industry, as much as they've created the problems to an extent. That, PPAs might just be I would call it, the standard of the future, 20, 30 years from now, we don't know. And with the cost of, the technology, dropping, it's picked up a little bit. I've been watching it quite closely, and, within the COVID period, it's picked up, and we're hoping that once the pandemic kind of goes away, we will see that benefit coming still through to the industry, so that we can make the country productive. If we cannot, if the cost of electricity is so high, it means that our economy will not grow. So I think that our industry is critical in enabling our economy to grow.
It were very nice statements, and actually a super interesting discussion. And it's so gorgeous to see how not only the industry, but also financing is developing. So it follows a little bit. So like 2, 3, 4 years behind, but at least we are there. And it's not only, as Kyle said, it's not only FNB. There are also other banks offering financing. And I think that was the point what we learned today, that the clients definitely have to speak with their house bank, and that we as installers, or you as installers, should have a look what is available, register with FNB. And so then we hope that financing of PV systems will be a super normal thing in the future. Thank you very much to all. It was really a great discussion, and thank you very much to the super active audience. And as Vivian said, she has all your questions and we will try to answer them afterwards.